Good morning, everybody. It is Thursday, March 20th, and we are going to start our prep for today, and we'll review what happened yesterday. So we laid this out ahead of FOMC that we had that overinsurance, and that was going to provide that bid in the market. So when the data came out at 2 o'clock, we had a quick little down move, and then again, that puts a floor in the market, and we see the rally as everybody then has to close out their insurance positions. We saw that play out, and now all of that is gone. And so in Globex, in the overnight session, now that bid that was there yesterday is defunct. And so that's where we make that move lower now and rely more on all of our other internal factors and our other flows that come in. So before we get really in depth today on the other instruments, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So if we look at yesterday on the ES, we made our move up into the data until Powell was done speaking and then came lower. And that was this insurance, again, unwind. And for today, we are still within our rotational levels. But the other thing that was a big signal yesterday for us is this move up all day yesterday was still on 6% less volume. So the volume, again, we talked about this, that customers coming in the store are not supporting those higher prices. We had a big price increase and less volume. So that volume is not helping to support this move. And that's, again, where we can look for that bigger retracement. And nothing was saying that we would continue that trend. There was actually a 78.1% chance that we would have a short last night, and that was the trade of the night. If we come down to our lower rotational zone at 56.60, it is a 57% chance this morning of a good long. And we always look at this in terms of the odds because nothing in the market is guaranteed, but you can stack the odds in your favor. And we do this with every instrument to know what the odds are and where the broken record is that we can capitalize on. So for today, we are under our line in the sand. Our major line in the sand is up here at 58.51. Our minor line in the sand is right at 57.08, which is right around our mid-level pivot. So again, being under both of these will bring more volatility and cleaner moves, but also bigger moves, and you'll probably have larger stops. So just be ready and be on guard for that. Our rotational zone is 57.54 to 56.60. You can see that here. And then our pivot is again right where this line in the sand is, and yesterday's point of control, as well as Monday's point of control. And that is at 57.03. Our upper targets in the big areas to watch here, 57.60 is going to be a major one to watch if we do get up there. Again, we can see that right here as an offer that we pushed right up into in Globex, and that's where we would expect market makers. Even though they're not as active in an illiquid time during Globex, there are areas where they need to protect their books, and this is a clear signal of what needs to be protected. And then once we lost that 57.38 again last night, holding that was telling us support. We would expect chop between these two, and then once that fails, we can look then for that to turn into a big offer and clean downside below. Above us, 57.72 will be where we have others, and then really up at our upper pivot here at 57.96, where we get a $2.5 to $5 billion sell from our systematics. Our upper target would be 58.27, but we will need to see the VIX to get back below 19 to really see that rally. So that's one of the things we'll be watching. On that downside, we want to watch our lower rotational zone, which lines up close to Tuesday's value area low. But our lower ends, 56.03, right at our pivot is where our market makers start to be flush with cash and capital to deploy. And anywhere in this zone, we will have billions to put into the market. So that's where we will look for another floor. And that is our lower target. And again, we can go through quickly here on the NASDAQ and other equities. NASDAQ, again, but below both lines in the sand, our major and our minor. Very similar setup here. We came right into that offer and then sold off. Upper offers are at 2,200 and 2,240. Our rotational zone today is 20,080 to 19,680. And then you can see the lower targets here, 19,315, and then an upper target at 2411. On to RTY. So it is a little bit different. It is over its minor line in the sand, but under its major line in the sand. So we are expecting choppier price action. And you can see our major offers right here at this 2132, which is right at the top end of our range today. So again, like everything else, it's right inside of its rotational zone at the moment, 2107 to 2066, and right at its pivot of 2083. And then on to Dow. Dow is the only one that yesterday was over its line in the sand, and now today it's back under. So this helps support that move up on the 30 stocks that are factored into the Dow. And now we really want to watch that 42,310 because inability to get over that will signal for the components that are overlaid between the S&P and the NASDAQ. So Apple, Microsoft, and others that are in the Dow and those indices. This will be a good gauge for if that's going to continue or if we see any kind of turnaround. And so Dow, we're looking for rotational 42,518 to 41,923, lower target 41,394, and upper 42,920. Again, we can watch the VXD if you want to look for the volatility there. We monitor and map that as we go. Again, yesterday's move up on the Dow was on 16% less volume. So again, not supported by the number of customers and the volume and the flows coming into the market. This was an upside move on weakening volume. So we'll turn to commodities really quick. We did miss the high on copper by 2 ticks, so we can't always be right, but we were pretty close. 515 that would be the target, and then again a nice short back down. So we're going to look for copper to find balance today. Probably won't break its rotational low at 503. That'll be a big thing to watch, but we're looking more for staying between 503 and 512 today as the market tries to balance out a little bit. And we can also view the Hang Seng, and we reviewed this the other day with the Chinese tickers because copper is a good proxy here for China. Gold, okay. So here we said yesterday, getting over that 38, we would look for higher. We went long in our personal accounts here at 38 up to 62. Got out right before at 61 or 60 half, I think it was, as it started to pull back. And now, again, gold, we are looking for that rotational price action. This area of 39 to 50 is the key today. Um, Probably going to be choppy inside of there, as that is where our market makers have a lot of positioning. And if we get over, then we can look for cleaner upside. Under, we will look for downside back to 3,024 is our first target, and then 3,008 is the lower target. But being in this uptrend with rising bond prices, falling yields, inflation dropping, and growth slowing, we will look for more people to go into gold, into silver, into the breaking out commodities. And so we are more long biased on gold for the coming days and weeks as of now. So until that changes, we are going to look more for dips to buy rather than areas to short on gold. Oil, again, not signaling any macro risk. Breaking 66.40 will be key for more downside. And you can see we were unable to get over this offer here at 67.46 and 67.95. And that is right at our top rotational zone where you could have had a short yesterday or into Globex for the downside move into the rotational zone. So our lower target here is 66.36. Just quickly on natural gas, again, we're looking more rotational. Energies are better shorts at the moment and more rotational, less directional moves. So that's where we're focusing when we look at the energies. And then just very quickly here, as we mentioned yesterday, we were looking for the yields to come down. We were looking for Powell to strike that dovish tone but no rate cuts. And the goal, again, from a refinancing of debt standpoint, is to get the yields to drop in the next few months, which again is probably not going to bode very well for our equity markets. So we saw that breakout, and hopefully you're able to catch some of that yesterday on CPI or on FOMC. Our next CPI reading should come down even lower and show more disinflation, but also slowing growth. And that is what the tariffs are designed to do right now, because that is what the goal is to bring these yields down, especially on the 10-year here, to see see bond prices rise. So we're going to look for a breakout on bonds, and we, told you this yesterday. And then same thing on the 2-year. We were looking for that breakout, and we got it. We got the upside move, and that means the yields are coming down. So yesterday we had these going up, which also was telling us that move up on the equity side, that move on that insurance, and we showed you where that was positioned, that's all that was happening. It's a position move, not a trending move, not an actual move that can be trusted, because these shouldn't be moving in tandem. And so then in the overnight session, we got that counter move in the equities, which now brings balance back to the flows in the market and into those correlations. So those are the levels we're looking at today and what we're watching. And again, as always, guys, be sure to control your risk. That's the only thing we can actually control in the markets when we come into the market each day. So make sure you are preparing yourself and protecting yourself and your own capital. Have a great day, everybody, and we'll see you next week.